It is the last day of May. Remember, back a couple weeks ago, the Dow Jones Industrial Average broke 40,000. It's also up 16% over the year. Now, one of its major components, though, Honeywell, makes up about 3.4% of the index, is lagging despite delivering solid numbers every quarter. Romaine and I caught up with its CEO, Vimal Kapur, who is celebrating his one-year anniversary in the post on Saturday. And we started by asking him if their three businesses, automation, energy, and aerospace, still fit together.
My near-term priority is deliver the results. We have an earnings guide. We meet or beat it. So that gives us, the right to play, continue to evolve our portfolio, but also be open for all the options. I mean, my job as a CEO is make sure that we drive the shareholders' earnings. That's what I really stand here for. But near term, we have a strong operating system, strong strategy, and I feel convicted we are on the right track.
As you know, there are a lot of investors, activist investors, who of course have looked at the model and at least in their minds think they have a feel for it. I've heard your CFO, as well as other executives at Honeywell, talk about this idea that you yourself are your own activist investor. Kind of explain that.
It's like you always look at it, are we creating value collectively? And ask that question frequently enough and don't wait for an activist to show up. Ask that question, present that proactively to the board and see what the answer is. And whatever the answer is, run company towards that versus trying to wait for any other scenario. That's what we really mean by we are our own activist.
So if you were your own activist and looking at your stock price versus your peers, what would you tell yourself? Because it's underperformed, and the question for many analysts is for no reason. Because you deliver, you got the margins, you got the growth, you got the earnings, so what gives?
Obviously, I mean, being in this job for a year, it's certainly a disappointment, I would say, but what we are working is to deliver our commitment for this year, and I'm confident that as we deliver our earnings, the year progresses, we'll certainly get the valuation what we are looking forward to.
There's also conversation that the moves that you're doing in terms of divesting some assets that aren't non-core and making some acquisitions like you did with Carrier, for example, almost $5 billion, they're just not enough. They're not sexy enough. They're bolt-ons. You need like something transformational. What do you say to that?
I would say that given we have three compelling trends on which we are aligned to, I don't see a need to add one more transformation. That to me is a stretch argument by making it too general. The question remains valid. What's the next big move in automation? What's the next move in aerospace? Absolutely. And that's what I really work every day to make sure that what can we do organically and what can we do inorganically. And you can expect us to do a lot of work towards that as the time passes by this year and next year. I'm excited about inorganic opportunities in each of the three spaces, and our pipeline is much stronger than it has ever been before. And I do expect that we should be able to announce the right deals during course of this year, and that will be the true test that we are really executing our strategy, and we don't need a transformational deal.
Is that primarily going to be acquisitions? Are there also divestitures that you're also considering?
Some divestitures too. I mean, if I have to truly live to my word of the three mega trends, there are parts of our portfolio which don't fit well, and we'll slowly divest them. The reason we have not been public is to best interest of our shareholders, because by making it public, we won't get the value at the exit point. But it doesn't mean internally we are not doing the work. We are doing the work, and I think it will unfold as the time passes by.
I do want to get your thoughts on the automation business. Investors have been a little bit concerned about how that's like the other two major units that you have. I mean, we are at a time of pretty tremendous structural change in our economy, structural changes that I think would be a pretty big tailwind for the automation sector. Why have we not seen that show up yet in Honeywell's results?
Look, our business is, I would say the near-term results are a combination of our automation business, which is short cycle and long cycle. The long cycle portions of automation are doing well because people are building long-term capacity on different end markets. The short cycle is still recovering from the COVID cycle, which can look awkward to say you've been 4 years and you're still talking about COVID, but the stocking impact the distributors is still playing out, and that's a large portion of our automation business, and that negatively impacts the numbers at this point. But we are confident as the year is progressing, every quarter we are doing better than the previous quarter, and that's our the rubric for 2024, that sequentially we keep improving short cycle every quarter, and we have a strong exit and end of the year, which positions us very well for 2025. So I'm very confident this is not an if or when. We exactly know the different businesses and different cycle they are, and when they are going to see recovery. And we see recovery in many of the businesses already, but it's not all in because it's not a switch. We have multiple businesses and multiple end markets. Therefore, it is going to be sequenced over a timeline.
So the warehouse automation part, you are 100% committed to it.
Absolutely. Today, we are absolutely committed to it. It's a critical need of improving worker efficiency or labor shortages. So this is not about debate of is it a good sector or bad sector. Fundamentally, the value proposition is very strong. It went through the capacity build and overbuild during the COVID cycle because everybody put too much of bet on e-commerce and overbuilt it. So it's going through some correction. So there are the correction pains we saw in 23. We're probably going to experience it in 24. But if I take a 5 or 10 year view, clearly there is a clear value proposition on why people invest in it because it gives productivity to them.
Which leads us back just to inorganic growth is what you were talking about and seeing opportunities there. Next year you're looking at selling that quantum computing business, and that could fetch as much as $5 billion or even more, right? That's a nice hefty sum.
It is.
What do you want to buy? You say you don't have to have a huge transformational deal, but what is on your shopping list?
So our shopping list is bolt-on acquisitions because you want to be thoughtful on how you want to progress your strategy in each of these 3 mega trends. And the bolt-on acquisition to me is something which attaches with your current business, takes you to an adjacency, and compounds the growth of that business by itself. So acquisition we made on compressor control last year, that was an acquisition into our automation business. It's a bolt-on to that. The acquisition we made for Carrier is a bolt-on to our building automation business. We acquired Civitanavi in Italy. The acquisition get completed in course of the year is a bolt-on to our aerospace business. If you see the trend line, we are very purposeful to do the bolt-ons, and we stay on course for 3 of our mega trends. So we are not doing some random things which make no sense. So everything you will see moving forward will following the same trend line.
Is that going to be enough to get your growth engine really started?
Absolutely. I mean,
when is that growth engine going to rev up hardcore?
Look, our commitment to our shareholders is 8 to 12% earnings growth every year. And what I need to work on is when you look at a 5 years or greater horizon, are we capable of delivering that every year on year? And so I look at organic growth and inorganic growth in combination of that, and are we really prepared for preferably double-digit earnings growth? And that's what I'm here for.
That was Honeywell CEO Vimal Kapur.